Hello, this is Julia C. Welcome to 408 Home Malone. In about 2 days, we're going to be in the new year of 2023. So here in advance, I wish you have a happy new year. And in the year of 2023, be happy, wealthy. Now, by now, you might have heard a lot of housing prediction for 2023. I'm here, I'm going to give you some industry forecast for the new year. And then I also will share with you for the last 20 years history of San Jose area. Looking at the history is our best teacher. Maybe from there, you will find the house trending for 2023. I will also give you my opinion of the housing price for 2023. Now, first, let's go over the industry most people predict. Now, in the Wall Street, Goldman Sachs predict the housing price will drop 5 to 10% in the coming year. Now, National Association of Realtor, they think the national median price will go up 1%. Realtor.com will predict the price will go up 5.4% year over year. Redfin think the home sales price will drop 4%, and Zillow believe the home value remain relatively flat for the coming year. This is nationwide. Now, California Association of Realtor, they believe the California median home price would drop 8.8%. That's a lot, 8.8% in California. Now, what do you think the housing price will be for 2023? Now, my opinion, the home price is driven by the supply and demand, right? So if it's more supply and less demand, the home price will go down. If it's less supply and more demand, the home price will go up. Like last couple years or even beginning of this year, in 2022, we don't have enough housing, but we have a huge demand. So that's why people bid up 500K, 20%. It's like crazy bid up for the price. Now, so what about 2023? Now look at the demand side. Remember, price driven by supply and demand. So let's look at the demand. The mortgage rate. Now let's go to the Fannie Mae mortgage rate. This is the chart for last 10 years, the mortgage rate. Now it's obviously easy to see. Now our rate is the highest compared to the last 10 years. So what does that mean? The higher the rate, the more expensive for buying a home, more expensive to borrow money. So it's getting more expensive. Now, if it's more expensive, then will be less people can afford it. So the demand will be less for the higher rate, right? Now let's look at the job market. Now rate is higher, less demand. What about the job market here in Silicon Valley? Now, you might have heard in the last couple months, Facebook, Amazon laying off like 10,000 or more people, and a lot of high-tech company, big company, they're not hiring people anymore. So, you know, when a company laying off people and not hiring, you know, company, they have their own marketing, right? They want to attract high talented people. If they don't hire people or they laying off people, that's very expensive. See, when they hire people, they give a new employee a sign-on bonus plus higher salary to attract them. See, that's very expensive to hire a person. If they laying off people, that means they don't see a future in the near term. They don't see the need growing in the near term. Do you agree? Now, for people who have a job now, I talk to a lot of people and they have a job, but they're scared. They saw the friends and maybe they heard the other company, they are laying off people, so they got scared. So what they do in terms of buying a home is a big deal, like a big purchase. So when they don't feel security in their job, they want to postpone their purchase. So I have a few buyers just say, hey, we want to wait and see, don't want to go get into it. So those people were, even they have a job, they still scared. So that would make some people postpone the purchase, so make the demand less. So now we know the less demand. So what is the price driven by? We want to see how many supply, right? Now, let's look at the supply side. Look at the inventory source. So when people sell, who's selling? If you're the seller, you have a very low interest rate on your current home. Would you sell it now and to go buy a higher cost mortgage rate home? Will you do that? A lot of people wanted to hold on to that because its cost of the debt, the loan is too expensive. So they rather not sell them. Okay. Now, there are some people have to sell, like the builder. That's their job. They build a home, they have to sell it to get the money back so they can continue the business, they can build more homes. There are some other flipper. The people will buy the home, fix it up, and resell it to get a profit. There are some people do that. There's a flipper. Flipper normally get a short-term mortgage rate, which is a lot higher, like 10%, 12% interest rate for less than a year. So to make a profit. So there some flipper, if they don't have the cash, they buy the home, fix it up, they have to sell it to pay back the loan. Otherwise, it's hold on to it. It's too expensive. Now, who else have to sell? If they lost a job, they don't have cash in the bank, and they couldn't find a job in the short term, so they have to sell. Now, let's look at the Redfin median price in San Jose metro area. Who have no equity and no job and no cash. Okay, now, if you're looking at the end, December 18, we have year-over-year price is dropped 6% compared to last year at the same time. But we still have equity compared to 2020 and 2019. Now, for the whole year, most of the part in the year up to September, even up to October, people who buy before October, they still have equity in the house. Only for the last couple months, then we dropping lower price, then we losing equity. But for people buying in like May, in April, which is like median price 1.6 and now it's 1.3, so they're already dropping 20% equity. They're losing 20% in San Jose if they buy in May and April timeframe. If these people bought it in May and April and they lost a job and they lost equity, and they don't have a cash in the bank to continue the mortgage, they might be panicked, they might be selling, right? But this is not a lot of those people too. So let me share with you the San Jose history that I've been keep tracking. This is all from MLS. Now in 2001, this is price per square feet. We have about $298 price per square feet in 2001, and then in 2004 and 5, we have 2 years, we have 43% appreciation. And then 2007 and 2006, about break even, it's like no change. So in 2007, price per square foot is 457. And then 2008 and 9, we dropped more than 50, 56, 57%, right? 58% actually. In 2 years, we dropped 58%. And then because dropped so much, then we have 2010, we have about 11% appreciation. And then 11, we dropped again a little bit. And then until 2015, then back to $467 per square feet. So from 2007 and 2015, so it's take 8 years to break even. Since 2012, we have 10 years appreciation continue going up every year. Even this year, 2022, average we still gain 2%, right? Now, if you look at the chart, it's easy to see. See 2005, 2006, 2007, it's like 3 years we've been on top, and then we dropped 50%. Now, if you look at the right side in the red here, the history, the inventory higher when the price going down. Since 2012, we appreciated like almost 3 times appreciation. But look at the inventory now. It's higher than last year, but we still, compared to last 20 years, we still in the lower end. So what do you see? So we see less supply. So here we see less supply and less demand. So what's the price will be? My opinion, next 2023, the home price will be like zero, say flat for the year. Not much change. Why? If you look at the history in San Jose, when we up like 40% here, and then we stay flat on the top for a couple years before it dropped. Now we're gonna stay here for a couple years. At least my opinion, we just like that. We're gonna stay here for a couple years, too. So do you agree with me? We're going to be the price is same, no change for the 2023. Let me know in the comment. Okay, so that's the price I want to share with you. If you follow us, every month we have 2 market update, one in the beginning of the month, first weekend probably of the month. We're going to share with you the Redfin data. And then on the 3rd week of each month, we're going to share with you California Association of Realtor housing market update. So if you follow us, definitely if there's any change, you will know the market trend. So stay with us. If you find the information helpful, please hit the like button, and I appreciate that. I'll see you next time. Thank you. Bye-bye.